Hello everyone and welcome to the latest edition of our construction insurance power panel. Now this is officially our Q2 edition, albeit we have slipped into Q3. So you do have two more of these to come before the year is out. And in this edition, we will be delving into the subject of tariffs, from underwriting appetite to claims disputes. To do that, we welcome someone new to our panel, stepping in for Chris McLean. That's Alicia Clendenan, Senior Vice President, National Director, Sustainable and Alternative Construction at Aon. So Alicia, welcome. And to kick us off, tell us how are global tariffs and trade tensions, particularly involving the US and China, impacting construction material costs in Canada? And indeed, how is this affecting insurance valuations and premiums as well?
Well, volatility is really the primary focus. I think what's really interesting is we are seeing impacts vary across sector. So residential construction, for example, has seen a bigger immediate impact in terms of procurement. Some of the larger infrastructure projects, less so. And overall, the amount of uncertainty is just necessitated more rigor around procurement. So we are seeing companies that are maybe have a deeper team, more established, able to pivot quickly, create new relationships, find new source for some materials, especially raw materials. Those pivots have happened a little bit more seamlessly than I think everybody expected. So less of an impact. Things like equipment, mechanical systems, different sort of specialized glass, potentially, those have been harder to immediately pivot. So those have seen different cost increases, different implications, delays. But I do think it's important to sort of differentiate tariffs versus just supply chain, because there had been a lot of disruptions in the supply chain already. And I think that has helped some of the more well-prepared contractors and owners because they'd already sort of put some plans in place, thinking about sourcing, being more intentional about relationships that they're creating and what they're speccing and what they're using. The economy has slowed. Contract prices, in some jurisdictions are going up because of all of this uncertainty. In others, they are flattening out because of just sort of a mix of different factors at play. So it hasn't been the same sort of huge spike that everybody was initially anticipating, but uncertainty is just that. And so, the very next week it could change. And definitely that's problematic, especially if you're in fixed price contracts. So there's still, a big buffer in terms of contingency or even some different risk allocation for some of those core procurement components, especially in some of the larger infrastructure, like maybe hospital builds or other things. We're starting to see different negotiations between the contractors and owners around who's going to hold the risk of procurement or potential delay resulting from that procurement or delivery, for some of those key systems that maybe there isn't a whole pile of alternative places to source from.
Okay, so clearly change is afoot, but what approaches are Canadian brokers using to help their clients in terms of managing these rising insurance costs, particularly, of course, linked to those tariff-driven increases in construction expenses?
I think more information is the first step. So being able to provide a more detailed analysis of your cost breakdown and also sourcing. Some contractors have almost gone too far the other way in terms of stockpiling a bunch of material. And so that's creating a different sort of insurance consideration around ensuring adequacy for offsite coverage, making sure that all of that material is appropriately covered, thinking more carefully about the transit. So there's two factors always, in project insurance costs. There's the value of your contract and what you want to insure, and then there's the rate we're applying against it. So as I talked about, uncertainty and volatility is really changing that contract price a lot. In some places in some jurisdictions, we're seeing that it's going up substantially because of, tariff and supply chain uncertainty. In others, it's flattening out because that's sort of balancing off with different economic forces and oversupply of certain things in that geography. So, maybe that's making it go up or maybe that's making it go down. In terms of the rate, insurers don't like uncertainty. They like predictable, certain historic costs. So I would say the best way that we're able to help clients mitigate against that rate increasing purely because of uncertainty or supply concerns is providing that information. Here's where our key components are coming from. Here's the kind of relationship that we have with those suppliers. Here are the steps that we've taken to vet these people, whether that's subcontractors, suppliers. Here is the contingency plan. If something is delayed here, we can change this in their schedule and still stay on track, or we can't. This is absolutely critical path, but we've ordered it early. It's sharing more information about those things contractors are doing anyways, and helping insurers feel some level of comfort around that there's a plan B, and they're sort of have a very clear approach. I think the other thing that's really interesting, so I lead the sustainable construction practice in Canada, and I think the other thing that's really interesting is, while all this uncertainty is happening and everybody's looking for alternative sources and what else, can we be doing, we also have this sort of layer of different provinces, different municipalities in some cases, layering on their low carbon policies, their net zero targets, their different approaches, which are starting to now impact project starts because projects are starting after these different policies are impacted. And a key component of many of those policies is around sourcing. And, you get points and credit for more local use of materials and reducing your overall transportation footprint of the project. And not just the materials that are going into the construction, but all of the practices around that. So that's sort of amplifying also this focus on procurement, materials, suppliers, and in some ways, the sort of global uncertainty is helping push some of those policies forward because people are already in that mindset and looking at it, and so it's helping local suppliers that maybe wouldn't normally have the volume for you be able to step up and provide some, because that's still adding benefit, not just directly but also indirectly through things like your insurance costs.
You've placed the spotlight beautifully there on brokers, but if we can, let's just look at insurers in Canada as well. Tell me, how are they adjusting the underwriting appetite or the guidelines in response to these tariff-related supply chain delays and also increased project costs?
Especially for delay, there's a lot more sort of rigid underwriting focus, a lot more information. We're looking at, more detailed analysis of that loss severity. There's a lot more questions around schedule, what else could happen. But I would say overall, we haven't seen as big of a change directly related to tariffs or this global supply as maybe we've spent time talking about it. I think it's something that they're monitoring. Often where that will show up is in sort of a claims inflation additive into the rate. So once they've actually started to pay some claims where the costs have been increased because of tariffs, because of these things, sort of like we've seen with social inflation on some lines over the past years, then it can come in. But we haven't seen anything sort of directly linked yet, so long as you're able to present good, clear, detailed information for underwriting. And I think all of that always just kind of circles back to engage a little bit earlier, connect with your broker, have a clear plan. How are you presenting this information? How are you presenting the story? If there's something new, different, unique about this project, or that it's your sort of first foray for your firm, be clear on the story around that. Help insurers understand why they should be comfortable maybe you've partnered with somebody, or you picked a consultant team that's got strength that's bringing this on, or it's an owner relationship you've had for a long time and you're just building, with a different material. Be clear with that story so that insurers can kind of have that comfort, and then present them the information so it's clear that you have a plan and you have thought through it.
Well, you've spoken a little bit about insurance pricing already, but what I'd like to know is how are tariff-related fluctuations in material pricing affecting the accuracy of replacement cost estimations in Canadian builders' risk and, of course, commercial property policies as well?
Fluctuations, there's always fluctuations. The example that comes to my mind is, during COVID, we had great supply interruptions, and the cost of lumber and just some traditional building materials in Canada went through the roof. It was crazy. So there are always cycles that are happening that are impacting that. I think what's different right now is just that many of those sectors are experiencing this cycle at the same time. So it's not just lumber that's crazy for some reason, or just steel, but we're seeing it everywhere. We're seeing it in glass and in your mechanical electrical systems. We're seeing it in copper. We're seeing it in wood and concrete. So I don't think it's really thrown off replacement cost valuation too much. I would caution that sort of that escalation clause that you would have in a builder's risk policy normally. You really want to be paying attention to that. Maybe this is the time to be pushing for 15% included automatically, and not just sort of 10 or 5. It's some market standard, to make sure you have that buffer, because we just don't really know, despite everybody's kind of best efforts. But overall, we haven't had too many claims come through where that's been a factor negatively affecting the payout. And that could be that, we're just early in that cycle and we haven't seen that come through yet. But it also could be that because of the economy, a lot of projects are getting put on hold, slowed down, canceled. They're proceeding in stages instead of just a full go notice to proceed. So that's tricky. And I think the other thing is, because some of that work has slowed down, many of the owners, especially in the residential sector, have had to start shedding some employees. Contractors have as well. Maybe their, C or D teams, so to speak, are dropped off for right now. And so the people that are left, it's the A teams, it's the B teams. So that estimating has just that little bit of a higher level of detail. Everything is coming together a little bit more well. So
if I can reflect on something you said a little bit earlier as well, you spoke, of course, about the importance of brokers educating their clients. If I can put you in the spotlight, what are you doing to educate Canadian construction clients about the implications of these global tariff developments? And of course, how receptive are they to those conversations as well?
Well, there's lots happening. I think it's important that the industry is having lots of conversations like this one. At Anne, we've got a number of tools, and I'll speak about them in a minute. But I think it's really important for us to recognize that we have a widespread of types and sizes of contractors, and that's important because we have a widespread of types and sizes of things that need to be built. So you've got really sophisticated companies that might have whole departments that are focused around issues like policy and procurement and building supplier relationships. And then you might have others that, have a core project team of PMs that do everything themselves. So tailoring the support to suit both the type of organization and the type of projects they're working on is important. The one thing I think that universally supports all of those different firms and different project types is a deeper dive into risk allocation and the contracts. There is a lot of industry standard, that has served everybody fine. Maybe has been imbalanced, maybe hasn't considered a number of different factors that is shifting risk to places where those parties can't control. And that's really what we're focused on. Are you being allocated risk that you can manage and control? And if you can't, can you transfer it through insurance in some sort of a commercially reasonable way? And does that make sense? And especially when we're looking at some projects that maybe are threatening to be put on hold or canceled altogether because of overall cost escalation or other economic factors, being able to line up that risk into the right place is really important. We've definitely seen a few projects be able to move forward because the negotiations between owner and contractor just sort of hit a wall. You have to take these risks. That's what you always take. This is what the standard is. Well, the world isn't standard anymore. Why would I take those? I'm not going to risk my firm. Like, no, I'm just going to walk away, just kind of like full stop. And then when we actually get into it and look, there are tools that can be used there. And I think also a little bit more of a analysis for some of the larger projects around loss severity, critical things. Are there other insurance tools that maybe you traditionally haven't used that could support some of that risk that is unpalatable for you to just take on? Maybe you do need to procure early. You need to stage payments with owners in a different way. Okay, how do we make sure that we create an insurance solution to include that offsite, to include cargo, to look at contingent business interruption for some of those key suppliers? How do we use some of those tools that already exist that just maybe haven't been necessary? And now that can shift enough risk away to make it palatable for everybody to move forward.
As well, have you seen an increase in claims complexity or the disputes in construction insurance due to the delays or cost overruns linked to those tariff-induced supply chain issues?
It's definitely one of the first things I think that everybody was considering when all of this sort of disruption happened and when all the different tariffs started sort of being laid out. So far, it hasn't shown up in the claims numbers. We haven't seen projects, have those core components coming from highly tariffed places impacted. But again, that might just be sort of the stage that projects are at. Maybe some of those projects are all still early days and we haven't had that one to have sort of a big intricacy loss, but nothing that has really come through and shown up in the claims numbers or in claims disputes yet.
Well, I have to say, that is a fantastic debut. Huge thanks to Alicia for stepping into the fire and very much rising to the challenge. Remember, our usual band will be back together again in the Q3 edition. But until then, keep it right here at Insurance Business TV.